If we have one rate cut, two or even three rate cuts, what does that accomplish for the American economy, given your 2% statistic for growth?
Well, first of all, of course, let me remind your viewers that at our most recent meeting, we made no adjustment to policy, but we did say that we are monitoring closely the cross currents that are facing the economy and some of these uncertainties. And also, as Chair Powell indicated, there was, I think, broad agreement around the table that the case for providing more accommodation has increased since our May meeting. And clearly, we're going to be looking and be very attuned to the incoming data flow. But again, I think the important point, Tom, about our policy is we have the tools necessary to sustain expansion, a strong labor market, and stable prices. And as appropriate, we will deploy those tools to achieve those goals.
We welcome all of you again on Bloomberg Radio and Bloomberg Television Worldwide, a conversation with the Vice Chairman of the Fed, Richard Clarida. Our Craig Torres is not only writing of economics, but he is truly a student of the history of it. As I mentioned before, Yellen with the word slack, Clarida with the word solid. Craig Torres says, how stuck is this Federal Reserve? What are the degrees of freedom you feel you have, given the global events and given the realities of a buoyant, a solid American economy, and yet a need for rate cuts? How stuck in a position is this Fed?
Well, I admire Craig. I don't think we're stuck at all. I think, in fact, we have the flexibility that we need that I think some other countries would wish that they had. Our primary tool is the federal funds rate. We're far away from the zero bound, so we certainly have some room along those lines if we need to, and again, we'll act as appropriate. So I don't think we're stuck at all, and I think, again, we have a toolkit and we have an objective assigned to us by the Congress, and we're going to do our best to achieve that objective.
This is incredibly important, the idea of being near the zero bound, and we have one rate cut. I'll get to 50 basis point rate cut in July in a moment, which I know you don't want to talk about.
That's okay.
But is it linear? If you cut 25 basis points, 50, then 75, is it a linear effect on the American economy, or does it compound? Is there an inertial force? Is there an increasing force as you make multiple rate cuts?
Well, I think there are a couple of points here. First of all, a lot of our models are linear, and as someone who wrote down models, I know that, but the real world is nonlinear, and I think as policymakers, we factor that in as we can. So the linear response is the starting point, but in that room and in that meeting, we're certainly alert to nonlinearities.